Well, good afternoon. I'm from Challenge, Pierre Menton. We are now going to have a new roundtable discussion. We'll talk about finance. What is the role? We saw this morning with Mr. Ferri Pesani, we saw the importance of the financial shock that the transition could be. And we want to see whether our financial systems are well calibrated for these particular shocks and where will we get the monies. So I'd like to take stock with Ulrich Hege, who is the professor at TSC, who is going to give us the setting, and then we'll have Lucie Pinson, who is the founder and director of Reclaim Finance, and Nathalie Tubiana, who is both financial and political sustainability director at Caisse de Dépôts, Mr. Roux, who is the entrepreneur and also at the head of a company called Ethiquable. And then finally, Gianmarco, who is the head of Deloitte in France and for the French-speaking Africa. So we're just, we still need a bank manager, but still we'll talk about them and give the floor to Ulrich, who's going to give us the setting for this particular topic and the way in which we can organize the financial system to know whether this corresponds to what the issues will be. Thank you. So the needs, funding needs for the energy transitions are huge. To give you some figures, it will be around 5% of the gross national product for the coming years for the world. This is an estimate. There are an average. This is an average. This is the from the Agency for International Energy. Why is it so expensive? Well, because the energy transition is specific in that most of the investments to be carried out need a lot of capital upstream, not so many operating costs afterwards. We saw this is true for the production, distribution of energy, and so on and so forth. And so the bill is very expensive because you have to catch up the delay, and so you have to accelerate this transition. Is this realistic to be able to mobilize so much funds? Now, for this question, it's very useful to make a number of comparisons, two comparisons. 5% of the gross national product of the world, that's a lot, but then the world is also investing about 30% of year after year. So you have there's 1/5 or 1/6 of the wealth produced each year for the energy transition. And then we are already spending a lot about energy. Now, concerning fossil energy, it's about 5% as well. We invest about 3% in the energy system. And so already 60% are directed to decarbonized energy. Now, if you look at all these figures, it seems very probable that there shouldn't be any problem to really mobilize all the funds that are needed. Still, for these funds, will we find the real assets for decarbonizations? And it's a matter of the supply and demand. Now, I'd like to start with the supply. Now, technologies are available. Now, the capabilities for productions are available as well. Now, the world capability for production of solar arrays is about 1.3 terabytes per year. Now, this corresponds to about 3 times the consumption of electricity for the country of France. Now, if you look at this particular production capacity, it could be totally decarbonized. Now, this electricity production for the world, this could be done within 15 years. Now, of course, you cannot put everything on the solar arrays. You need a good mix, the right mix of energy. So there we are directed towards other issues like the architecture of the energy systems. And more particularly, most of these arrays have been fabricated in China. So this is the next topic, which is the risks. So investments to be made. For the investors, there are risks incurred because this is a mode of accelerated transitions, and many of the elements that are essentials have not been clearly defined, like the storage. And there's a lot of investments to be made in the R&D, and there's a lot of today concerning the evolution of prices. If we look at transport at scale, we can see every day that there are new ways, like the estimates concerning the relative weight of solar for wind farming has been evolving. It will not be necessarily evolving correctly because there will be. But if we look at the risk for the investors, for the financiers, there's always a premium, which is to be added to the cost of capital, which is going to make it more expensive for the energy transition. But let us be reassured, because the investments in solar arrays, in order to meet the stable and predictable consumption, this is not a risky investment, and it could be done at a rate of about 0, if I'm not mistaken. Now, if this if there are volatility of prices, as was done in some markets at certain time of the, if it becomes negative, there are risks. And this has to be harvested or managed with a tariff system. So let us consider the demand. Now there we can find that all the issues and all the blockages are concentrated on this. I'd like to summarize 6 of these problems, particularly what the economists are calling the frictions. There are investments, huge investments will not be made because they should be profitable and the funding should be there, but the investments will not go there because they are afraid of never being able to be refunded for their investments. So there are 2 examples here that are very important: the energy infrastructures in underdeveloped countries, and this will be a panel on which we will have to come back. And then do not think that the markets, private finance markets, will necessarily find the solutions themselves. And the investors may lack the trust in the political stability of a system. So there are other examples as well, like the investments in renovating residential areas. Now, and there are true poverty traps that have to be overcome. Now, talking about the emerging countries, the most realistic solutions mean that you have to rely on the public institutions to guarantee the public funding, because then they can use that and provide guarantees, and you can have some blended or mixed financing. So you have to find the right dynamics to have an agreement between the North and the South to install these in the other countries. And the other stumbling block, the current trend with the protectionism is not going to help, because most of these these batteries are produced in China, and if you look at what the Commission has announced yesterday with taxes about 30% more, this will not help in the production of this. Now, third stumbling block, which is inflation, and the problem with the purchasing power, because this is going to produce the reverse effect to what would have been rational, rather than accelerate. They have really damaged the trust and stability for the investments towards this. Now, the extreme volatility of the energy prices of the last 2 years is to be taken into account as well. And I'd like to. This has been reflected in the rebellion of the consumers. Also the farmers, and also the car drivers, and also the owners of badly insulated dwellings, and Now, the fact that these are turning away from their participating into this energy transition, and it has consequences. And this needs. This shows that there's some nervousness about this, and there are a Green Deal, and there are some damaging effects. Now, if the elections, European elections, is not so good for the Green Deal, we can be pessimistic. But of course, from a financial point of view, it's going to give rise to an uncertainty which is going to kill the funding of this green transition. Now, if there's a stagnation of the investments for the electric car, for example, and in the production of batteries, for example, which will be underutilized, so this is an additional risk for the investors, which leads to more premiums for the investments. So there's a backlash on the part of the consumers, and this is an important issue to take into account. And it gives a lot of uncertainty, and the finance suffers as well from the fact that investments are long duration investments in order to get a return, to pay back for these investments, and as a result, they are very much sensitive to the interest rates movements over the last year. And what has been seen on the financial markets over the years is that there's been a sharp decrease in the price of the for the companies that were very much advanced in the energy transitions. They've been penalized, and as a consequence, the performance of the green investments are also penalized, and the investments are moving away, and the insurers have broken their agreements for a net zero emission, and so again, there's investments moving away, and that's very detrimental to the financing. We have to stop this, the lack of security for the investments. And so my plea here would be to say that you have to reflect on another mode of operation, because we have to take the energy policy and move away from the political milieu, and we should be independent from. This should be done based on the monetary policy, where the economists have been fighting for decades to be independent, because there was a similar problem. On the one hand, the public very much attached to the idea of having stable prices, but on the other hand, the profits were coming from a different monetary policy. I'd like to end. I have to interrupt you, because it's very rich what you have said there. You talked a lot about the political aspects, which is very interesting as well, but I'd like to have a first round of reflections to respond to what you have said. And Lucie Pinson, in terms of demand, there are many issues regarding to different time horizons between the short and the long term. Like the banks that you are supervising are most of the time listed on the stock exchange, and there are quarterly results, and they have long-term policies in terms of sustainability. And it's the risk issue. Now, can we ask a bank to take risks on investments that are not very secure because the technologies are not at scale yet? And is it not for them to do that? But still, as Ulrich is saying, it should be the public authorities who should intervene. And of course, the case, my other colleague over there could respond. And could we take stock about the system? The insurers are moving away from these investments. So briefly, on these three issues, I just would like you to respond. That's a lot of things to talk about. Well, I just would like to say that do we need funding for transition? Well, we need 5% and 30% of investments of the gross national product, So the banks and they have the. Should we trust them for this transition? No, because quite clearly the financial actors, like any fossil energy companies, will deny some of their activities, and starting from 2015, well, they pollute less than the industrialists. In terms of services, well, it's a debate for the European Union, has shown that there was another vision for finance, and the fact that they have a responsibility to carry for the world of tomorrow, and potentially they are part and parcel of all the impacts of. So maybe they are not doing what they should. Well, you asked me to take stock, so I'm just trying to do that in a very short amount of time. Starting from 2015, the financial actors starting not so much to be concerned about the impact of their own funding or their operations or different types of financial services, but they really got concerned about the financial risk associated with the deregulation of the climate change, rather. And we can see today that even if there have been evolutions and changes, and clearly the situation today on the financial situation and the climate change is very much different from what it used to be, and it has nothing to do with what it was in 10 years ago. So definitely we have moved further, and but we can see that the bank managers, whether they get the support for these transitions, they still continue. And I think it is important to say that it's not only a matter of knowing how. We should really understand that these solutions have to be developed by replacing and not as a complement to the activities that are polluting. And we have to recognize that these financial actors are supporting activities that are intrinsically not in solidarity with this with our targets. So $67 billion. This is the amount that the French banks have been allocating to the expansions of fossil energy since 2021. In other words, the scientists from the GIEC, same thing for the renewable energies? No, I'm coming back to that in a minute. But then, still, this is not the question. The question is, we know that we are not going to move away from the fossil energy from one day to the next. But how do we support a dismantling of the infrastructures for the fossil energy? This cannot be done without developing the alternatives. But then, as of now, we should stop adding on to it, because each new project is adding a burden for years to come. So the GIEC experts have been saying that we should no longer develop green gas effects infrastructures, but from 2021 onwards, the agency intends to stop these infrastructures in its scenario to limit the heat, the climate change, and the banks have understood that, but still they are continuing to have their own practice, doing the reverse of what they have been promising. And so we know that things are moving. You're asking me, so of course over the last years we've seen that in France there have been some evolutions, and in this year Crédit Agricole and BNP Paribas have abstained from issuing bonds for the gas and oil, and that's a very good fact. But it has not been supported by most of the financial actors, because you have Banque Populaire, Caisse d'Épargne. This is often forgotten. They are supporting bonds to the tune of 4.5 billion for Total Energy, and which goes for the gas and oil. And even for BNP Paribas and Crédit Agricole banks, they no longer want to issue bonds, but their assets can still buy the bonds, which are going to serve the oil extraction companies. But still, the consistency of all the practices in terms of oil and gas for the whole entity of BNP Paribas, it takes time. But there's an emergency in terms of climate here, and we have to stop we have to lose as less as we can. So we have to go through regulations, rules and regulations. That the risk is a very important issue, and the agency for regulations and should really intervene in order to help the financial actors to find the right solutions. And we have various proposals in this particular respect with the central banks. They could have differentiated rates to distinguish between the polluting sectors and also inside for. Okay, I think I'll have to give you the floor a bit later because I want other speakers to respond to what you have said. And well, in terms of rules and regulations, I think this is a very important to look at the long term, and there will be some incentives, as I've said. There should be a constraint as well, because it's not possible to do away with without this. Now, we'll come back to these rules and regulations. I think it's very important. But on the other hand, I'd like to ask Nathalie Tubiana. You are both the head of the finance sector for the Caisse des Dépôts bank, and you are also the head of the sustainable development policy. And so would you share the observations or the finding that part of the work has been done by the bank sector, because you know it well, even if you are a very specific agency, but should we stop the funding of the development of the fossil energy? Yes, good afternoon, everybody. So, yes, definitely. As Lucie was saying, a lot of we have covered a great deal of ground, but still a lot has got to be done. And what is important, it was Lucie said, you should find some alternative solutions. So you should find the means to fund the transitions, ecological transitions. It has to be a fair solutions. We shouldn't take only the energy and impact. We have to look at the impact on the society as well, on the populations. This is what we've been saying at the Caisse des Dépôts through our various strategic axes, and there's a lot of ground to cover still, and the rules and regulations are going to help. It does already, because it is being enriched with all the directives that are issued, and also Serville is going to oblige all the institutions with CRD. They will have to do some reporting, not only on the what took place before in terms of transition or fair transition. We're insisting on S&G, but also they'll have to report on the commitments for the future in order to go even further in this particular field. And so from this point of view, I do share the point of view given by Lucie, but I think we are on the right track. As a finance actor, what do you do in terms of investments for the energy transition? Because it's at the very core of the group, CDC group. Could you summarize in 2 words? We talked a lot about the billions of euros. What does it mean? Well, the group is a major group. It's not only a bank group, it's a public group or investing for the long term. This is our raison d'etre. So because we want to support transition, there's an urgency here, but still it should be supported through time. And we have 3 major strategic axes. We want to contribute to we want to support sovereignty, be it economic, industrial, and we want to support the territorial and social cohesions. So it has to be a fair thing. Now, ecologically speaking, in 2020, we had a funding plan of about 60 billion euros over the 5-year time horizon till to 2024. At the end of 2023, 1 year ahead, we funded 80 million euros that were mobilized for energy transition, and we have set a new commitment to 100 billion euros for the years 24, 28. On priority sectors which should benefit from these fundings, the energy sector, of course, in order to develop the capacity for renewable energies, as was cited in the previous roundtable, and also to develop the real estate sector, because there we are mobilizing a lot of funds in order to renovate the social dwellings that we are funding, and also to construct buildings that with a high energy efficiency. And we are also supporting the soft mobility in all the fields of transport in order to develop collective electric vehicles, and also the preservations of ecosystems. And this is a baseline. Whenever we invest, we have €1 into a project. We want to ensure that diversity is preserved.
So that's why we decided to have a parallel between sustainable development policy and financial policy. Financing schemes must integrate all the factors, not only financial criteria. You are an entrepreneur in a very specific company. Could you, in a few seconds, say a few words about it? What about your performance criteria? Finance, most probably, because when businesses are bankrupt, they can't do much. And what do you think of all these regulations? We have heard two people strongly advocating regulations, and as a small, medium-sized company manager, your opinion may differ. We are a cooperative entity set up 20 years ago. It's in the field of solidarity economy, social economy. We do conduct a fair trade with specific organic products. And 3 years ago, we decided to relocate chocolate production in the Gers department, southwest of France. We do buy cacao with cooperative producers. We did locate our premises in the Gers with solar arrays. It's an environmental friendly, building. And so you did get money, you did get funding, about 10 million euros for premises plus the machinery equipment. We were set up 20 years ago. We found funding easy. We got funding easily, and it worked well with us. But what I wanted to say here, and I agree with what has been said before, is that the timeline plays a crucial role. Finance want short-term results. When you know that environmental transition takes a long time, and do you know of any bank telling you we have got fantastic investment schemes, but they will yield some revenue in about 50 years' time? I mean, it's not feasible. This may have been possible when your grandfather was planting olive trees or whatever. But the fact of banking on organic products, on local products, we do emit 3 times less CO2 in our production. Are you are your prices higher? No, not really. We should have 3 times as high prices. It's not the case. It's only 20 centimes more expensive. The speaker didn't give the quantity for this price. And embarking companies in environmental transition means that we have to show it's possible, feasible, and the fact that we are cooperatives, what we call SCOP, SCOP in French, means that we can make decisions which are less revenue yielding in the short term, but which make our companies perennial. And when I turn to banks, they tell me, oh yes, we have got some green investments, exactly the same as the other types of investments, but just named green. And some time ago, we heard a lot of investments in concerning environmental transition, but not much about the possibility for people being involved in this sector to be properly financed. Anyway, this transition, in a nutshell, is not quick enough. There is a very wide scheme of a very wide portfolio, of a funding scheme. Carl, you've been in Brussels for quite a long time. You know of all these quite thoroughly. Would you agree to say that priority is now large-size companies level, but this priority is reaching small and medium-sized companies little by little. I'm talking about standards, the speaker is saying. So would you say the process is still in progress? What about your approach on this issue? We know that there is money available, but money has to reach the right structures, right entities, right people. Between talking about the SRD, I would like to say the finance doesn't live in a parallel world. Of course, we must make sure that we have enough money, but the real problem is the downstream side of things. That's social acceptability. That is consumers. When you know that net wages are not that high in France, I'm talking about net wages, hence poor acceptability when it comes to green transition. So we have to find the right projects which will be accepted by consumers who have limited purchasing power in Europe and in France. The very fast train you used to come to Paris was financed years and years ago, and in a kind of mixed scheme. Now we must find innovative funding schemes in order to limit or to cap price increase. Otherwise, this will remain a hindrance. And SSRD does contribute to this. What is regulation? Regulation is a common language, making sure that all operators do speak the same language and say the same thing without greenwashing. What the European Committee has done has been largely criticized, since they said that the only power of Europe was the European market. And for all the players who want want to sell on the Europeans, they'll have to abide by this regulation. And they will have to say what they do to abide by the social and the green transition prerequisites, so to speak. And they have to prove that what I'm saying is not deemed pure greenwashing. It's really sure, it's reliable. So CSSRD may sound complex, but means that we must abide by the same rules. And the Commission has introduced a virtuous cycle because they have encouraged companies to go along the lines of their commitments in line with their activity. And of course, regulations are not the only solutions, but they are prerequisites to decrease funding and final price for the final consumer. When it comes to financial innovation, as stated in a previous roundtable, can be useful. We know about the limitations due to poor purchasing power, and we have heard of greenwashing. But I'd like to go back to regulations too. In your agri-food sector, there are a lot of labels on there. Your sector is highly regulated, tightly regulated. Does the customer know it all when eating something? Are consumers congruent with this? And do the investors know what they're investing in? I'm not going to go against the regulations. We don't mind regulations. We have got our own labels, organic labels, green label, etc. We need this certification badly. Everybody tells you I'm doing greener than green, and which is stupid. And a high environmental value is a label which makes you believe that it's very good. But it's a different label for people who do not want to go organic. Organic production is going to reduce by 3 the carbon emissions. And I mean, not everyone wants to go for it, except these labels, the real labels. But on top of that, you have got private labels, you know. We know that cacao production is very detrimental to the environment, and many private companies have got what they call sustainable cacao production. Without doing anything at all to protect the environment. And consumers have to clearly understand things if they want to go for safe, reliable, and really green, and not more green than green products. All this is quite complicated. There is a real discussion at international level, at European level. Is everybody clear concerning the ISR funds? As I want to save money. Shall I invest in green? Shall I invest green, so to speak? Or are we in a fuzzy situation? Well, as far as greenwashing is concerned, and as far as funding investment products are concerned, We have got the ISR label. That means sustainable, socially sustainable investment, ISR French acronym. But let's imagine if I invest money for green fruit production, I'm sure the money, my invested money is not going to be used in the oil production. That's right. That's right. So that's true. Regulatory authorities should take this real problem on board and should punish greenwashers. We did conduct a study on workers' saving, and this study showed that there were some kind of lies concerning the nature of the investment, the real nature of investment. Huge problem there. And we will have to regulate badly. And we know that there is a lack of consistency between management and public savings. You have the lack of taxation issue when targets are not compatible with French objectives or the French timeline and plans concerning green production. What is being discussed at European level with SSRD and so on and so forth, what's going on at the European Central Bank level, some more norms will be requested. What about green standards or green norms? Are they level with what is expected? There are still quite a lot of greenwashing, but progress has been made. But we do need these norms to rate all the companies, but it's not perfect. And companies must be sure that things are clearly delineated and must know that what they are doing is useful, that there will be some kind of capital cost compensation, which is not always the case. Because let's not forget that these companies going green have to do some reliable reporting. They have to be better and more informed. Progress is being made at the moment. And we have to acknowledge the efforts made, but regulation is essential and mandatory. We have got a question on the European Central Bank. How can it help and point the green investments? How can financial innovation, we took the example of the French very fast train, how can we, are some specific investment schemes green labels, so to speak?
Alors, le greenwashing, en quelques mots, je pense que la recherche de labels, d'une manière générale.
Labels, of course, are quite useful in order to delete, suppress greenwashing. But all the institutions have to be transparent too, companies too, and reporting is extremely useful to know what is already being done and what remains to be done. There is a long way to go still. but reporting is very helpful. Now, concerning financial innovation, it's at the core of the matter. If the European Central Bank can lower its rates for green-oriented investments, that would be fantastic. But I think the problem is much more complex. Lowering rates means that you have to take on board far-reaching problems. Let me take the example of local authorities, local and regional schemes. Local regional authorities have lots and lots of problems. Of course, the financing aspect is one. Their finance is complex. And they find it very difficult to identify the appropriate project. So we have to support them so that they can better conduct their diagnosis, better understand the territorial needs. They can better identify the projects answering the transition needs. And, well, there is a real learning curve. And they have to get to know the local specificities, mountain areas, coastal areas, taking on board the climate hazards. They must understand how to deliver appropriate support, so to speak, to the initiatives in the green sector. On top of that, they have to envisage the refunding by green companies, the refunding schemes, etc. That's more the micro aspect. Now, at macro level, can we envisage a kind of guarantees extension, state extension guarantee to limit and reduce this risk due to price volatility and due to the prevalence of long-term investments? Yes, we have got InvestEU. It's fantastic. It works well. It has a leverage effect. It makes it possible to levy additional funds, and it's already being implemented. Why not think of going one step further and extend this type of scheme? Yes, we have to go in this direction. It's one of the main levers we have to take into account to embark all these stakeholders, both private, public, state authorities, local authorities, banks, bank institutions, so that they can gather together and pool their investments. One question concerning the political aspect and the part to be played by political players. The fact you are a cooperative, the fact of having the most sustainable labels possible, is all this an advantage when you talk to banks? When talking to banks, are you disregarded? Or are you welcome, so to speak, by banks? How did the banks react with you? At the very beginning, when did set up the cooperative, and we had to find these 20 million euros, it was a nightmare. And it was a nightmare. It was very difficult, but that was 20 years ago. What's the situation today? Quite clearly, when you have over 75 million euros turnover a year, when you are the leader in organic chocolate production, you are nearly welcome. And you are kind of dealt with as anyone else, and not differently. Our rates are the same as our competitors, not lower. That's it. But things have evolved. Quite interesting what you are saying, because banks do often tell us we don't have enough green products. Well, we have the Caisse des Dépôts that focusing on the solidarity economy, and but that's another things. There is a question on the orientation of these investments. I'm here turning to you. You mentioned this backlash effect, and the study clearly said that there was withdrawal by investors of the funds they had invested in socially sustainable projects. Is it just a marginal issue? Is it a matter of concern? Or is the deal, or did the deal change last Sunday night?
Yes, everybody was scared Sunday night. Is it something a one-off effect? The majority of European funds were put into sustainable financing funds. So there's been a change. Let's hope that the conditions will be met so that it can be done again. But there's such uncertainty as we're talking, political uncertainty. Some use this, they're really trying to capitalize on this. But investors who say that they are ready to invest their funds on investment, this means something. So you have to bet on it, bet on the resilience of this, because financiers said that it was possible for investors to combine sustainability and a green pay more in order to be green. Stop with that promise. Tell investors that if they go for green investments, is because this is your own personal choice. Profitability is bound to be slightly lower. So, but this tends to encourage the people ready to save. Now, did you see this kind of a backlash? You think it's true throughout Europe when you talk to investors, or you think that as a matter of fact, they don't care much compared with 2 years ago? Well, it is a fact that the past 2 years there's been a slowing down on the part of financial actors on both sides of the Atlantic as to the quantity and quality of the measures set up, contrary to 97, when the business sector was said, okay, we're still in Europe. There was a one-penny planning started by Emmanuel Macron. No, you have to remain committed. Now the situation is totally different. Emmanuel Macron asked for this kind of pause, and as with the elections, we see there will be no going back to what the European Union is, and the measures that are already applied, if adopted, even though they're inadequate, will remain. Now, okay, we're financing the Green Deal. How do you finance Green Deal? It's too early to tell. You don't know whether the financial investors think that in the longer term they have to deal with the climate issue, because they, whether like it or not, they will have to take the climate challenge into account. It doesn't mean that the insurer will act accordingly. Insurance see that sometimes or often it's not possible to insure, and then they continue to accept insuring industries that don't really play according to the rules of the game. So there is a risk. The financial market, financial actors might indeed end up being extremely short-term, use a short-term approach. And this happened in the past. All you can do is make sure that you have the proper weapons to try and fight back. So we'll continue on politics. As far as you're concerned, representing consumers, did you see anything new? Is it the case that people are not buying as much organic? Well, the organic market has gone down with inflation. Same thing in 2008. As Ethiquable continue growing, I think that consumers want to eat high quality and things that are meaningful. So this is the winner is the Banque de Dépôts. They invested in industry which is both sustainable and ethical.